What's going on, guys? My name is Ben. I'm with High Strike Trading, and I'm going to tell you guys today what my 30% rule is and how you can use it to scale your account from $100 all the way up to potentially $100,000 using this 30% rule that I've used to scale my account from the same number to $100,000. So the 30% rule is pretty simple. So in general, we want to say that when you're able to grow your account by 30%, you're ready for the next level. And so you're going to graduate from level to level, each level being a 10 times multiplier of the previous level until you get to $100,000. Pretty simple. So let's walk through it. So first, you're going to invest $100 into your trading account. You're not going to be able to day trade, right? Because you have to have over $25,000 to day trade, but you're going to be able to make 3 day trades every week. So you're going to start with $100 and you're going to aim for 1% per week. And you're going to try to build up to $130. That's a 30% return on a $100 investment. You might have some red days intermixed there, and that's why it's going to be important to develop consistency. And when you know you're ready for the next level is when you're able to get consistently to $130. So once you reach that, you're able to deposit more money if you have the savings. If not, you can just continue to grow that same small account. But if you have the $1,000 savings, you can deposit that into your brokerage, and then guess what? We're going to do it all over again. But your emotions are going to be a little bit more engaged here, okay? So you're actually trading with $1,000 now. It's a little bit more money, and so you're going to have to get a handle on your emotions, which is just as important as doing your technical and fundamental analysis, because honestly, trading is just as much emotions as it is technical analysis. So once you have that $1,000 deposit in your account, you're going to focus on doing all the same things you did to bring your $100 to $130, but you're going to try and bring that $1,000 to $1,300. And so you might have some red days mixed in there. You're going to be aiming for 1% a day, which is now $10 a day. And once you're able to grow your account to $1,300, you're ready for the next stage. The next stage, you guessed it, is $10,000. So if you have the savings, right, and by now maybe you're saving up as this time goes on, as you're testing smaller accounts, if you have the $10,000 savings, you can put that into your trading account if you're comfortable once you reach $1,300. And now you're going to shoot to do the same exact things you did to bring your $1,000 account to $1,300 to bring your $10,000 account to your $13,000 account, right? That's a 30% return on a $10,000 account, 30% rule. So you're going to focus on risk management. You're going to focus on all the same strategies that you were doing. And this time, emotions are going to be a lot, right? So $10,000 is a significant amount of money. So to be able to make $3,000 on top of that $10,000 investment is a very big deal. If you're able to do that, then you're proving to yourself that your strategies are working at this point, right? You're mixing emotions with technical and fundamental analysis, and you're proving to yourself that you're able to turn a consistent profit in the stock market, and not just any profit at all, a significant profit. If you're able to make $3,000, then you know you're doing something right. And we're not just talking about putting your money into a risky investment that has the potential to go up 30% or down 30%, right? And then you just keep dumping money in your portfolio until it happens to go up 30%, right? Because that's not what we're talking about. We're talking about consistent 1% growth per day. So once you hit that $13,000 level, then you're free. So this is pretty much your ticket to tell yourself that, hey, I think I'm ready to invest with a much higher amount of money. And this is where it starts to get fun. Once you start to have $50, $70, $100,000 in your account, then you can start turning real profits. 1% of $50,000 is $500. That's more than most Americans make, or people throughout the world make, in a single day. So if you're able to make 1% consistently, like you've proven to yourself over and over with your $100,000 and $10,000 accounts, then once you scale up to $50, $70, $100,000, you're going to be making between $500 and $1,000 per day for your goal. So it's very important, if you're a trader that's wanting to scale your account to that $100,000, that magical $100,000 level that everyone's chasing, that you take it slowly and you don't jump too much. Because while sure, you may have $100,000 in savings, it's not a very good idea to just jump into the market with all $100,000. You definitely want to build that base first. Trading is something where you absolutely have to build the groundwork before you scale up, because law of large numbers, if you don't know what you're doing, you're going to get burned. You're going to lose money in the long term, even if you get lucky a couple times. So it's extremely important that you build that groundwork first. Another extremely important thing that you're going to have to realize is that in stages 1, 2, and 3, that's $100, 100, 1,000, and 10,000, you're going to have to abide by the PDT rule, which is the pattern day trader rule, basically stating that you can't complete any more than 3 day trades in a 5 trading day period. I have another video just on this, but in the basic sense, that's what it means. What you're really going to have to do is be extremely selective about the stocks and positions that you take. So you're only going to be allowed 3 positions per week. And if that sounds bad, then you really need to change your mindset, because it's about quality, not quantity. And I know that sounds corny, but that's really true. So if you're taking 3 positions per week, it's critical that you identify value and only strike at the things that are going to provide you profit, in your opinion. You're not going to be chasing positions all up and down your watch list just because you want to force a trade. So we're going to have to take days off as well. This is another big part about proving to yourself that you're able to trade with a small account and few trades, because if you get to that $100,000 point and you're able to day trade and it's going poorly for you, you're going to overtrade. It's just human nature, and it's very important to build that base and have your habits be good before you start getting into 100,000 and over trading just because you've exceeded the $25,000 PDT rule. Another thing that you're going to want to look at once you start having those bigger accounts is actually using this as a source of income. So what I do personally is I take money out of my trading account. I keep it at a normal balance, which is 100,000, and every time I exceed that, right? So say I make $20,000 one week, I will take 20 out, and I'll be back at 100,000, right? And so you're going to want to take that into consideration. So when you're at your lower trading levels, right, you could maybe do 30%. But when you're doing 30% on a $100,000 account, that's 30 grand. You're going to take that out and keep it to yourself. So you're not going to be compounding that interest if you're using trading as a source of income. If you're trading for the long term, then fine, you can start pushing toward that next level of $1 million. But personally, I'm someone that uses trading as a source of income, and I'm going to want to be paying myself the difference between my current balance and $100,000 periodically. And one last thing to remember, guys, is that you're going to have red days throughout this, and a red day isn't the end of the world. In fact, it's pretty normal. I have red days all the time. Our traders in our group have red days all the time. It's just part of trading. So what you need to be doing is making sure that your green days outweigh your red days, and that is the basic premise of trading. You just want to make more money than you lose, because ultimately both are going to happen. Trading is inherently risky, but if you're able to control those red days in a way which your green days overtake them, then you're ultimately going to succeed in the long run. So it's important not to get discouraged if you have a couple red days on your $100, $1,000, or even $10,000 account, because yes, sure, while it's taking away day trades and it is slowing you down, it's part of the learning process, and you're going to want to embrace those, figure out what you did wrong so you don't do it wrong again with a much larger account. If you got value out of this video, if you like my 30% rule, please like the video and hit that subscribe button, because we are growing fast and you do not want to miss any of the videos that we're putting out here on High Strike Trading. And if you are interested in getting a little bit more in depth in these subjects, there is a free course that's also linked in the description. Thank you guys for watching, and I'll see you guys in the next video.